Dennis Brager. I'm a former IRS trial attorney and a California State Bar certified tax specialist. This is one in a series of videos designed to give answers to questions that my clients frequently ask me. Today we're going to answer the question, what is a John Doe summons? A John Doe summons is an IRS summons authorized by Internal Revenue Code Section 7609F. Unlike other summonses, it does not list the name of the taxpayer under investigation because the taxpayer's name is unknown to the IRS. The term John Doe summons achieved notoriety in July of 2008 when the procedure was used to crack the back of Swiss secrecy laws and ultimately ended up in UBS turning over the names of about 4,500 holders of Swiss bank accounts to the Internal Revenue Service. It ushered in the current regime of stepped-up enforcement of the foreign bank account reporting rules. It also resulted in the Internal Revenue Service's offshore voluntary disclosure program and numerous criminal tax fraud prosecutions, as well as criminal prosecutions for willfully failing to file foreign bank account reports, known as FBARs, on Form TDF 90-22.1, which is now known as FinCEN Form 114. In 2013, the IRS used the John Doe summons to obtain information about clients of Wegelin & Company, Switzerland's oldest bank, who had failed to file FBARs. Ultimately, Wegelin closed its doors after pleading guilty to assisting Americans evading tax by hiding over $1.2 billion in assets. As part of its guilty plea, Wegelin paid the IRS almost $58 million in fines and penalties. Unlike other IRS summonses, which can be issued by the IRS virtually at will, a John Doe summons must be approved by a federal district court judge. The judge may approve only if the summons relates to the investigation of a particular person or an ascertainable group or class of persons. There is a reasonable basis for believing that such person or group or class of persons may fail or may have failed to comply with a provision of the tax law, and the information sought to be obtained from the examination of the records or testimony and the identity of the person or persons with respect to whose liability the summons is issued is not readily available from other sources. Another example of the IRS use of the John Doe summons was in the Belize Bank matter. In the fall of 2015, the IRS convinced a federal district court judge in Miami to authorize a John Doe summons to Belize Bank to obtain information about bank customers who were U.S. persons holding financial accounts at Belize Bank. Ultimately, the records received from Belize Bank will be used to target taxpayers who were customers of Belize Bank and who failed to file FBARs or to report income. An interesting side note is that when the IRS issues a John Doe summons, it impacts the statute of limitations. In cases involving the non-reporting of foreign income items, the statute of limitations on the IRS assessing additional tax is generally 6 years. However, if the IRS issues a John Doe summons, Internal Revenue Code Section 7609E2 provides that if the summons isn't resolved within 6 months, then the statute of limitations is extended for a time period which begins on the date which is 6 months after the summons is served and ends on the date when the summons is finally resolved. In the UBS matter, the statute of limitations was suspended for almost 2 additional years. If you'd like to see how the IRS calculated this, there is a link that you can click on below. The bottom line, though, is that even if you think the statute of limitations has expired and you're home free, if a John Doe summons was issued, you may be on the hook for longer than you think. Thank you for watching my video. If you found it helpful, please let me know by leaving a comment. And if you would like me to update you when I post a new video or send out a newsletter, please send an email to zlaviste@bragertaxlaw.com. And have a great day.